It's the time of the year when we look to the future. As the old year comes to a close, what will 1996 bring? Well, I've been talking to some of our expert analysts, and here are their predictions for the new year.
So what the Germans want to see is the big white hope, i.e. private consumption coming on board, because exports are certainly sluggish now. The German mark appreciation is biting. We don't foresee the international demand going anywhere in a big way. Investments, therefore, on the back of that are, if anything, losing steam as well, and it's already happening. So basically, you have to kickstart the economy via the household sector. Now, for that, you have obviously 19 billion net tax breaks coming in. The big question mark is, are the Germans going to spend that additional money, or are they going to save it?
And in terms of kickstarting, it means lower interest rates as well, surely.
It certainly does mean lower interest rates, and I think the room is given for lower interest rates, but I feel that the Bundesbank wants to wait to see if private consumption does come on board and therefore revives the economy, or at least takes over from the export sector and partly from the decline in investment sector, or if it doesn't happen, and that we will know already in the first quarter.
And how much will thoughts about EMU, the thoughts about where the Deutschmark will be in a single currency, do you think that will be a factor next year?
I think it will certainly remain in the headlines next year, especially because of the intergovernmental conference, which is due to start. And I think that the Germans are going to continue to push towards a strict adherence of the Maastricht criteria.
Equity analysis would support a good improvement in stock prices in Europe as well. We do have complications. We have questions over, as you say, the Maastricht criteria, putting too much of a straitjacket on domestic policy. We have a potential upset as the Russian presidential elections approach in June, which could upset particularly sensitivities in Germany. We have questions over political stability in a number of countries, which could play on those local markets. We have question marks, should trade numbers or other factors go wrong in the U.S., and if the dollar should weaken instead of hold steadily as we're looking as our main scenario, then you have ERM strains, which could also be exacerbated by statements of various officials to the effect that, yes, in fact, we're not going to meet EMU by 1999, probably not by 2001, maybe never in the form proposed. We saw what that did to the Italian lira a couple of months ago when Theo Weigel said that. It dropped 50 to the Deutschmark in a few days.
One last question is, where are we in the business cycle? Are we at the turn of the year experiencing across Europe a pause in growth, or are we seeing that first bit of the graph where we're moving into recession?
I don't think we are in any danger of recession at this point in the major European economies. We certainly have seen a slowdown, and we'll have a quarter of near zero growth in many economies this current quarter, followed by probably some stagnation in the first quarter. But beyond that, I think we are going to be looking forward to a reacceleration to moderate levels, and here we mean 2–2.5%. Earnings will pause. We've had some downward adjustments in many countries in our estimates, and they will begin to look better again by middle of next year.
The civil aviation industry is actually looking quite good for 1996. 95 is probably the bottom of the trough in the cycle. As you know, the way that aerospace tends to work these days, as so many other commodities, it tends to work in cycles. This one's been particularly nasty. It's been very steep curves, and that's meant that a lot of companies have had real problems. We had Fokker having real problems in 95. But I think what's going to happen in 96, we're seeing the beginning of the pickup. We've already seen that some of the regional jet manufacturers, British Aerospace's Avro, for example, picking up orders. It's been a particularly good year for McDonnell Douglas with the MD-90 and the MD-95, their brand new 100-seat aircraft. Boeing have done reasonably well despite the strike. They haven't delivered as many aircraft as they'd hoped. They picked up more orders. In fact, the only one that's had perhaps less of a successful year has been Airbus, although they've actually delivered more aircraft than anybody else. So everybody is seeing this take-up from the end of the cycle. So in the big aircraft, particularly the wide-bodied twin jets, the Airbus 330 and the Boeing 777. That's looking like a good market. It means it's going to be a good market for the engine manufacturers. In Europe, Rolls-Royce is probably going to increase its market share from 12 to about 20%, and Pratt & Whitney and General Electric are obviously doing well there. And a big competition now between Pratt and Rolls on these twin jets, which I think is going to, we're going to see some sparks fly next year. There's already accusations that companies are selling their engines at a loss in order to pick up the maintenance costs or maintenance work on them to make some money. If you go down a level and look at the regional jets market, we're going to see some severe changes there. I think the Germans will organise themselves into a regional jet cartel, which will bring in the British, the French, possibly the Italians and the Spanish. They see that there's going to be competition in Asia, already South Korea and India, Indonesia, China, Japan, talking about regional aircraft. The big market is out there in Asia. The Europeans want to maintain their strong position and be able to operate in that market with new technology, which is what that market wants. And then down to the bottom of the civil aviation business in terms of commercial transport, the propeller-driven aircraft. Already we've seen a reorganization in 1995 in Europe. We've seen ATR get together with British Aerospace with the ATP program, for example. That's looking reasonably good. Saab, with the Saab 2000, a very good aeroplane. I think probably we'll see some sort of combination with them to form a, we're going to have three stages of Airbus, if you like. Airbus the airliners, Airbus the regional jets, Airbus the propeller jets. They won't be the Airbus consortium, but they'll be modelled on the same lines. And we're even going to see, I think, some work in the corporate area, because the aero engines are very good there, and because Europe has a good lead in some of the technologies. So I'm quite optimistic we've seen the bottom of the cycle.
The global environment for bonds, and Italian bonds in particular, is still very good. We have still falling interest rates in Germany and in the rest of the world, which is very good for the Italian lira and also for bond markets. We also have an environment where Italian inflation vis-à-vis Germany will do comparatively better. That is due because the coming off of the VAT increases of this year and also the acceleration in food prices. So over the first few months of the year, I would anticipate that the Italian market will outperform. Over the rest of the year, it is a very difficult call to make. From an international perspective, it is unlikely that this global market may continue for another year at this rate. Secondly, there are very important issues for the convergence play that affects Italy, whether there is going to be a continuous drive towards European convergence. And with the IGC coming up over the summer, there will be a very serious test for the European convergence program. Secondly, for the domestic perspective, I should say, there are elections coming up, although it is very unlikely that there would be elections in the first part of the year, that is in the spring, and most likely at least by the fall. Clearly, the elections will be a very important test for the direction of Italian fiscal policy. After all, to implement very, very tight fiscal measures necessary for Italy to qualify for certain aspects of the Maastricht criteria, you will need a very strong government and seriously committed to implement what are, after all, unpopular measures. And so we'll have to see, as the year progresses, what direction of economic policy in Italy in itself and also of convergence in Europe will happen.
I'm afraid one has to say that probably we can expect, to a degree, more of the same, in that companies still are feeling the effects from their downsizing operations, from the lack of middle management, because they disappeared during the recession that we went through, and they still haven't caught up with the necessary controls in their downsized operations. So then with that, of course, we continuously have the increase in technology. We definitely have the threat from the internet and the so-called cyber banking that I think we're all trying to come to terms with and to fully understand. And there is the worry that the sophisticated criminal and people operating in the fraud world normally are fairly sophisticated, may just be one step ahead of the rest of us. And so we're going to have to keep a watch and make sure that we revisit the controls in our companies and in the wider society generally, to ensure that we try and keep pace with these developments as much as possible.
I think that this is going to be a very positive year for Russia, notwithstanding all of the current confusion about the elections and the election outcome. To focus on the broad economy at first, one has to see that the basic recession has really halted and new growth has begun. You can see this in the industrial sector, but also in the private sector, especially services, computers, software, and the like, just growing like mushrooms, just an amazing flourishing of the private sector, services and various kinds of activities like that, new construction in Moscow and some of the other cities. So there's real growth in the economy. The second thing is that inflation has come down very dramatically, and we expect inflation to be below 50% for the year next year, which is going to contribute to a stable exchange rate and some very new, interesting investment opportunities. The Russian government has signaled that they're going to open up their government treasury market to foreign investors, which means that there will be some very profitable investment opportunities in government T-bills, their GKOs, as they call them, with yields of 100% and the devaluation at less than 50%, some quite extraordinary opportunities there. The second thing is that the privatization program is going to slow down because of the political situation in Russia. Mr. Zhuganov and others have said that the privatization was handled badly, especially some apparent insider trading and some concentration in a few hands. So we would see that the equity markets might slow down in the first half of the year. But separately and more broadly, the Russians are going to start coming to the international capital markets. In the first case, we will see a massive IMF program go into effect in late January, early February. The extended fund facility 3-year program will be about $19 to $20 billion over that 3-year period of time. That's going to set the basis for a further reform-oriented program, and the Russians have indicated that they're going to come to the international capital markets for the government, borrowing as much as $2 billion. So you'll see inaugural euro bonds by the Russian Federation, followed by corporate issuance by companies such as Rostelecom, by the companies such as Norilsk Nickel, other major state industrial companies, and the banking sector. So there are going to be many, many financial opportunities, surprises next year.
More thoughts on the future after this.